With the right strategy in place, it's extremely possible to get a 20% gain on the next investment property that you buy in the next 2 years. So in today's video, I'm going to show you, regardless of market conditions, 2 different ways you can achieve this 20% gain in the next 2 years and continue to move yourself or your family towards your long-term property investment and financial freedom goals. Now, like I said, there's 2 different ways that you can achieve a 20% gain in a very simple way without taking on a huge amount of debt or a huge amount of risk from investment property. Now, the first way effectively is in a flat market. Now, in a flat market, we're talking about where conditions are not necessarily going backwards, but they're not going forwards either. And that is the majority of markets in Australia in 2019, outside of effectively Sydney, Melbourne, Darwin, and maybe Perth. So in a flat market, you really have 2 options to create value if you're not a professional or a developer. Now, the first option is to buy below market value. Now, in a flat market or a market where, there's potentially more supply than demand, buying below market value becomes an honest and real possibility. Now, I believe in Australia over the next 2 years, we're going to have some of the best buying conditions that we've had in Australia in the last 10 years. So if you can buy 10% below market value, then you're already putting yourself in a position where you've made 10 or half of that 20% immediately. Now, the second thing that you do after you've bought below market value is you buy something with renovation potential. Now, if you buy something with renovation potential, you don't have to necessarily go out there the day you buy it and clean it up and get your hands dirty and do this huge project that you may or may not be ready for. But what you can do is that at some point over the 2 years after you've bought the property, you can do a cosmetic, or if you're a bit handier, you can do a structural renovation at some point over that 2-year period and manufacture or create 10% of value. Now, it doesn't sound very hard, right? But buying 10% below market value can be a bit challenging, which is why the last video I recorded, which you can check out on YouTube, was titled How to Negotiate Like a Pro, and that gives you tips for exactly how you can buy below market value. Now, renovations are quite simple. It doesn't have to be this overwhelming, time-consuming, crazy thing. If it's an investment property, you've probably got a property manager. Talk to them about how they think you can add some value to the property and what other properties in the market are selling for that you can compare your future property's value against, and then ask them what ideas that they have. Take those ideas with a grain of salt and put your own ideas together, and then create a plan for a simple cosmetic or structural renovation that at the end of it, there's a number of properties that you can directly compare against what you've bought so that you can justify that 10% increase through that. Now, the second type of market is a hot market. Now, it's much easier to obviously make a 20% gain in a couple of year period in a hot market, because not only can you do these types of things, but you can also ride the wave of the growth associated with that market. So people that bought in Hobart or Sydney or Melbourne, for example, at some point in the last 5 years, have seen the benefit of what just owning in a hot market for a period of time can do. Some of those people made 10% in a couple of years. Other people at different times in different suburbs made 40 or 50% just from riding the market value up over that period of time. So we still buy below market, which is more difficult to do in a hot market. So all we're trying to do here is buy 5% below the market value. We still do our reno at some point in the next 2 years. But again, we're not trying to do a crazy renovation. We're not having to work it as hard as we are in a flat market. So we just do the basic stuff that's going to add another 5% of value. And then what we do is we get a 5% gain in year 1 and a 5% gain in year 2. Now, it's as simple as that. So 5 plus 5 plus 5 plus 5 equals your 20% gain on that particular property. Now, these are super simple ways that I've personally used, whether it's a hot market or a flat market, to speed up my position. Now, it doesn't only enable you to get a nice chunk of equity sitting there that you can revalue and leverage into your next property, but it's also powerful in terms of reducing your risk, because obviously if you add 20% of value to your property, whether it's a flat market or a hot market, it means that your overall debt position versus the value looks better, and therefore banks look more favorable on you. It protects you or gives you a little bit of a buffer in case conditions change in the future or in case your financial situation needs to change. Now, what you do at the end of the 2 years, not 10 years, with this 20% gain is completely up to you. I have two strategies personally with my properties. One is I buy and hold really high quality properties long term. The other one is to speculate a little bit more and maybe take that short-term 20% gain, which might in real terms after entry, holding and exit costs only look like 10%, and then use that 10% that I've made to maybe go out and buy another 1 or 2 properties and do it all again, or just take that cash that I've made to pay off a chunk of debt on my own home or another investment property. So strategy is a completely different conversation, which I've talked about in previous videos, but this is an easy way for most of you to create a 20% gain in the next couple of years. The only time that this doesn't really work is in a GFC style environment where property prices can decline really, really rapidly and very, very quickly. So it's certainly not a strategy at the very, very top of a market. It's more of a start of a market or middle of market strategy, which we're in right now. So if you haven't already done so, please like this video, please subscribe to our YouTube channel. If you've got other ideas of how people can make 20% gains on their properties through things that you've done, love to hear them in the comment section below. If you haven't already done so, check out our podcast, The Pumped On Property Show, where we talk a lot deeper about property investing and the things going on in our lives. And if you are seriously thinking about buying an investment property in the next 12 months or 2 years, and you'd like to talk more about where you are and where you're looking to go and how to overcome some of those challenges or the things that are holding you back right now, please jump over to www.pumpedonproperty.com and book a free strategy session in with either myself or my brother Simon, and let's sort of talk about where you are and nut out a bit of a plan. We can educate you on the market based on our experiences of buying over $350 million worth of property in the last 5 years. So thank you, I wish you all the best, and I hope this concept in one way or another resonates with you.